Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 7th, 2017. In this video, I'd like to take a look at the cannabis stocks. I have an ever-growing watch list as I come across stocks and articles that I read. This is just some of them here. As I come across articles that I read, or a lot of these ideas have come from members on the site. They'll bring one up, ask for an opinion. And keep in mind, as a gold member of the site, one of the benefits of a gold membership is you feel free to ask me an opinion on any positions, not just trades on the site that I've mentioned. But if you're watching a stock, have an opinion, or want an opinion, a second opinion on something, feel free. And so member Dazi had asked that I go over a few names, AMMJ, which we'll start with here, CANN, CARA, CVIS, which I couldn't find anything on that. I'll have to clarify what company that is. And then SPRWF. So I'll go over those here in a second. And before I do that, let me just... Okay, shut off my cell phone. Cell phone was going off. Okay, so I'll go over those stocks and just a quick rehash. If you're new to the site, I was doing extensive coverage on the cannabis stocks over the last year or so. We had really two main in and outs, actually a few. We've caught a few of these rips back here. And then leading up to the elections, I was actively trading these all on the long side, and then mentioned just before the elections that I was going to book profits, suggested doing the same because the fact that the cannabis stocks had, in my opinion, the risk to reward. It's all about risk to reward. Nobody could say, I couldn't say at the time that they wouldn't continue to go up at this rate, but it was very unlikely, being that most, if not all, and even then some, of the potential profits, again, going back, 6, 8 months ago, a year ago, you can read, I said this sector has, of all sectors out there, I can think of none others with so much potential, long-term potential, growth potential. That includes social media and everything else out there. A lot of tech sectors, tremendous amount of market share growth potential as more and more countries and states legalize marijuana for both recreational and or medical use. But then again, the stock market reflects news almost instantaneously. I'm going to use an example. I'll digress, then we'll get back to these charts. Just recently, I did an overview on the financial sector via XLF and a lot of the leading bank and financial stocks. I mentioned that I'm bearish, even though an article just came out in the Wall Street Journal last week that the investment bankers are now getting increasingly bullish on bank stocks, and I laugh at that. Where were they, before or right after the elections? Why is that article coming out now after the bank stocks had, I forget what it was, 25, 30% run, something like that, since the elections? In other words, the stock market tends to price in all known factors almost immediately. And in some cases, in the case of the ramp up into the presidential elections, I had mentioned, I think, what was it, 7 states had it on the ballot to approve marijuana either recreationally and or medicinally, and including California, which is, I think, something like the world's 7th largest economy or something like that in itself. So there's a huge market share, but how much of that's been priced in? Now, where I'm going with this, let's just look at, this is the run-up leading into election. I'm going to grab, but at this point, we're down here about 8.084 cents, and I'm using my measuring tool. If you look to the left in the box, the percentage gains about over 2,400%, and that was just about 2.5 months, that run right there. So my point being, just like I think the bank stocks had priced in almost instantly, and then just in a few months, a lot of the benefits for a repeal of Dodd-Frank, or even a partial repeal, pullback of some of the restrictions of Dodd-Frank, I think the marijuana stocks had priced in a lot of the future growth potential, and this pullback sense, was not only expected but healthy. And at this point, if you want to just stop the video here and get my thoughts, I'm not crazy yet. There are certainly some stocks at support you can add to. And again, to back up, if you're new to the site, I repeatedly stated my preference in trading these extremely speculative, low-priced, aggressive companies, and that is to take what I call a shotgun approach, Don't pick one or two that you think will be the big winners. If you get it right, yeah, you might hit a home run or a grand slam. However, you can very easily strike out. So using the same premises that a mutual fund uses or an ETF or just it's investing 101 is diversify. Don't put all your eggs in one basket. So by a shotgun approach, it means I like to take a dozen or more of these names. I'll add into those. I'll scale into those, scale in, scale out, meaning as we got here towards the top and I posted as we went, I would take profits on partial or full positions as price targets were hit. And, I reduced it to just a core some long-term holdings. But I'm strategically adding back. And again, I can see some more downside here. This correction may take a little more in time sideways. Then again, the charts really aren't glaringly bullish or bearish right now. So if you want objective entries, you buy at support. You can see as I go through these charts, each horizontal line is a support level. And I'll go over the ones that really stand out to me. For example, I have this 33-cent level on AMMJ in green. That's a very solid, significant level. If it got back down there, that would be a great buy point, as would this level. I would be a little concerned to see the stock give up, on more than a 1 or 2 day basis, give up that 33-cent level. And but these are, and this would definitely be a nail in the coffin or a big problem if we got down below that 20-cent level there. But either way, it can reverse at any of these levels. So strategically adding or subtracting exposure means that you buy on pullbacks to support. You can buy on pullback to this 52-cent level, certainly at this 33-cent level. You can wait for an all clear in the sector. Again, these, I often say, birds of a feather flock together, and there are times, such as leading up to the elections, where almost all of these stocks were moving up. However, I have seen a disconnect, and as these stocks are now clearly on the radar, you can see by volume below. Back here, they were obscure, just penny stocks traded by individual investors and speculators, but I have to imagine there's been institutional buying and more professionals coming in now that they see, the potential that I was talking about back here, that over time you're seeing more and more states and countries legalize, again, recreational and or medically, and that's a trend that is not going, it's only going in one direction, and that's going forward. So the market is only getting bigger for these. Yes, I mentioned also another concern I had at right after the elections is the new Attorney General, Jeff Sessions. He's big time anti-marijuana, old school, just say no to drugs, believing marijuana is a gateway drug. Trump's a little more liberal on it from what I've read. We'll see. We'll see what's going on. They both have their own messes right now with the investigation and the Attorney General, as well as everything going on in Washington. So let's not try to read too much deep into the fundamentals. Let's just look at the charts. All right, enough time spent on that, but I think it's important to kind of give you my thoughts on the sector as a whole, and I'll go over each of these and go over the key levels. One last thing before I do, I don't have all the levels identified or labeled, and sometimes I'll talk on them. If I hit the little pop-up, you'll see a box down here. You can see the level on the lower right-hand side, 0.098 something. But I would just advise you to pause the video if you are following any of these, if you want to replicate the charts, and put the lines on the same reactions. But the most important thing, and I feel very strong on this, when you have a security such as these cannabis stocks, for example, that have huge price swings, I mean, from just disregard this, that might be an errant candlestick. Let's just say from this low end of the range, as I mentioned recently, from there to there, that's about 2,600% gain from the low end of the range in just the last year and a half or so to the top. This is log scaling. Log scaling will put everything in perspective and show you relative to percentage gains, not point gains. Here's the difference. If I click over on arithmetic scaling, it is a completely different looking chart. The trend lines are different. It's particularly when it comes to trend line. Horizontal levels are still going to be the same because that's horizontal price. However, they're hard to ascertain with the price being compressed like this. So I go back to log scaling again. You can see these levels a lot clearer. And again, it makes a big difference when there's wide price swings. If you zoom in here to this recent trading range on AMMJ over the last few months, I click between arithmetic and log scaling. You can see it really doesn't do much to the chart, again, because the range is relatively small. But the difference being that when you have a stock that's down here around a penny a share and it goes up a penny, that's 100% gain from 1 cent to 2 cents. However, when the stock is up at $2, and it goes up a penny, that's 0.5% gain. And that's what log scaling will do, is give you a more accurate uh, picture of the price history by accounting for percentage moves, not dollar moves, which are point moves, which could be, again, completely different when the stock has a low price versus a high price. Okay, so that's the chart. There are some levels, and again, just replicate it using a log setting, and you can see where the reactions are, and you shouldn't have a problem replicating those trend lines. And as always, if you have any questions on these stocks, just drop me a line in the trading room. CANN. This is another one member Dazi had requested on the list of stocks. Cannabis stocks. CANN, one of my favorites. I like this one. I think this $2 level is a certainly an objective buy point. Right here we have what seems to be a symmetrical triangle pattern. If you look at this pattern right here, you have a downtrend line fairly well defined. I'm sorry, not a symmetrical. This is what I meant to say is a descending triangle pattern. You have prices down here, you have support at around $2, and you have a downtrend line. This is support, and it's pretty well-defined support. You can see the reactions. You have a reaction back here, numerous reactions back here, well-defined, and a reaction recently. So, and I don't wait till it hits $2. If I think that support will hold, you can start scaling in now. You can set your stops a little bit below, and if the $2 level gives way, which is possible, then you can see some of the other supports down here. But again, I like this one. It's one that stands out. And then other than buying at support, your other objective entry for a long is to buy on a breakout of resistance. In other words, a breakout of the trend line, which would bring you up to this first target level here. That's around, 280 or so. You have another other line here I should have added. And this line should be moved up at this point because we had reaction highs above there. So I didn't have time to annotate and catch up on all these charts, but these would be your next few targets there. So there's one I like, and I'll have to move faster through the rest. Dazi, the next one you mentioned was Cara, C-A-R-A, one of my favorites. Until recently, I mentioned, I've been trading in and out of this one since way back here, and it's had a heck of a run up, but I said this 1810 is a very significant level. We hit it, stalled, hit it again. We popped through it, a brief fake out, but then closed back down below it yesterday. So again, you're trading on a daily time frame. All that matter, or the most important thing I should say, are the closes. So a daily close using a daily time frame. Use a weekly time frame, you want to see an end of week close. So what do we have here in Cara? Again, I expected a pullback. I still do. There's a divergent high, forms a rising wedge. You can see now where this divergence is almost confirmed. You can see the PPO turning down here, the RSI turning down. So you have a stock that has run up in just a matter of months. Or let's just go back to this point last year. This stock was at about $4.40 and has run up 343% since last, looks like June. And now it has a bearish rising wedge. It's significant resistance. I mentioned this level. Look at all the reactions. 2, 3, 4, 5, a bunch of reactions here. Big old gap. That is significant resistance. So at the very minimum, I stated in the trading room the other day, expect a pullback to the bottom of this wedge. Maybe another thrust up, maybe not. And if it breaks down, this is the next buy point. This is where I'd be interested in adding back long exposure, this 1335 level. And if that goes, maybe we go down to the $11 level. But that's all I'm looking for right now, something like this. So move back down there, and then this one may power up. And it may need to consolidate between that 1810 and 1335 level for a while before it breaks out. But if it does, it would just build up a little basing pattern. Sort of how it consolidated here and then broke to the downside. I do expect, longer term, I like the fundamentals on this one. But right now, near term, I'm bearish. CVIS was another one. Dazi, you'll have to let me know. I couldn't find anything on that ticker symbol. SPRWF. Okay, here's an uptrend line, not shown here, but you had a divergent high. You can draw negative divergence here, and this is the story. So again, we had the story is a run up into the election. Some of these continued on shortly afterwards, but most have come down, and they are at this point consolidating. Now, some of those, I often say this: there are two ways for a stock to correct. Can correct in time or price. Price correction is a move down after a breakdown of an uptrend line like that, and a correction in time is a sideways correction or consolidation that helps work off these overbought conditions. See, this is overbought on the RSI, and now we are getting down. We're certainly not overbought. We're not oversold yet, but if these stocks are in early stages of a powerful bear market, we may not see oversold. And if we do see oversold, it may be very fleeting. All I can tell you right now is the trend is sideways. You're likely to be frustrated if you don't have patience. If you want to scale in, ideally you want to scale by towards the bottom of this range or wait for a breakout at the top of the range. That's 14, about, we'll call it 145. 145, the top of the range. The bottom is about 102 or so. And there's certainly some minor support there. But if the bottom of that range breaks, this is very solid support down here. If it got back down there, that would be a gift, as long as there's not anything going on, anything funky with this company. That's around the 36-cent level. But it's hard for me to look at this chart, and we do have a divergent high that was put in, and we've corrected so far more so in time than price. So, like I said, I'll flip a coin. Being that I'm bullish on the sector, I would favor an upside break, and I would rather be buying down here or on a breakout above that level. All right, so now let's get to the rest. I'll go through those quick. Those were the requests from Dazi, and I'll go through my list, and I'll talk fast because this video will go long. I have a lot of stocks. DEWM, this one just has a history of downtrend lines. You can see you get these downtrends, and then prices break above, and stock heads up. That's been the history so far. Some of these aren't very well defined, but you get the picture. And this, most importantly, what stands out to me on this chart, if you want to trade this stock or even buy it as long-term investment, the bottom of this trading range, that's where you want to go in. You can see that tends to be support. There's been a few flush out moves. These are very thinly traded. This is a penny stock, a fraction of a cent, 0.002 cents. So just keep that in mind. The lower the price on these, when you get down to sub pennies, under 1 cent a share, or even under a dollar a share for that matter, any penny stock, there is tremendous amount of risk. These are very speculative companies. Most likely they don't have a very proven business model and or management team, or both. But again, they're in the right sector. But keep that in mind, and also keep that in mind when adjusting your position size. If you see these super low price stocks, put a sprinkle about as enough money in those as you're willing to lose if the thing went to zero. If you woke up tomorrow and this stock was delisted. Okay. A lot of these are over-the-counter bulletin board or pink sheet stocks anyways. Next one up, TRTC, rising wedge. See the divergence here? We had a divergent high there. This wedge right here, this is what I'm referring to. Negative divergence. It broke down, and this 2245 level, 0.2245, is certainly a pretty key support. Again, that goes by number of reactions. We had a reaction there, reaction here. We had reactions back here. And so this is what you do. You buy these on a dip to support. If it breaks that support, that's not good. Next support would be down here quite a ways. But this is one you could scale in. And ultimately, it's got quite a bit of overhead resistance, but you really need to break above this level, that 56 level. There was the previous reaction high. That was just on a momentum overshoot. But so this is somewhere around 56, 57. And but the good thing is it's towards the low end of its trading range. So there's one you can scale into. It's 27 cents a share roughly. CBDS, I don't think I covered that one yet. See, here's a pretty bearish chart. Now it's a stock, again, it's a heck of a run. You have to put this into perspective. This stock came up since February of last year. it has increased by 3,000%, 2,950 by the rough measuring tool I'm using here. And the most salient features I see on this chart are this uptrend line and these lines here, which define a bearish rising wedge. You can see the negative divergences down below. So you had a fairly well defined uptrend line, a divergent high, breakdown, back test, and this one could be heading lower. Hard to say if that happens. Again, this is a sector that has certainly bullish momentum. The stock is certainly in a primary uptrend, but I can see very, very nice support here. I'm highlighting all the reactions for you. And that's down around between $3.50 and $4, give or take. So replicate that on your chart, and that would be an ideal buying zone. It may not get there, and it might. So you have to decide: are you willing, if you buy here well, you're in no man's land right now. I see no reason to buy at 590. I'd either wait for a breakout above the recent highs, a convincing breakout, or at least a pullback to this 480 or so level. All right, let's go to the next one. Go a little faster here. MJNA, similar story. We didn't have a divergent high because of this spike. This was higher than this high, or we would add negative divergence. But we do have a fairly well-defined uptrend line. Prices broke that uptrend line and whoosh, came down pretty hard. Now, they overshot. This is what I call momentum-fueled overshoot, when you have a very rapid descent or ascent. It can work both ways. That's a momentum-fueled overshoot. This is a momentum-fueled overshoot to the downside, and that's the support level I have at about 11.3 cents a share. And looks like we're flagging. That could be a continuation flag. We may break down. The most solid support I see, and again, if it got really ugly in the sector, I don't know if it's going to get that ugly. I don't expect it, but this is golden support down here, and that's around the 5.62 to 6 cent a level. But there's certainly these support levels here along the way. Any or all of which, including this one, could be the stopping point for this correction. I can tell you just from the look of that trend line and the length, I think this one could reverse anytime. Looks like this PPO is curling up, but I don't see bullish divergence, but it is oversold. And in an uptrend, if this uptrend is the real deal and only the start of a much more powerful uptrend, oversold rarely stays oversold for very long. Just like overbought does, overbought does stay overbought for quite a while in a powerful uptrend. In a bear market, oversold stays oversold or becomes more oversold, deeply oversold for an extended period of time, where overbought readings are very fleeting, but this is not. This is an uptrend. We've been in an uptrend since this point here. This is the low. So you can see an uptrend is simply defined as prices making a series of higher lows and higher highs, which we've been doing. That's an uptrend. Okay, moving on. CGRW. There's your levels. This one had this little descending channel, broke out, hit this resistance line, pulled back. There's an intraday overshoot of support. This is what I talk about. That's a pretty well-defined support level. If you zoom in here, you can see all the reactions that I have. I exclude a lot of these candlestick wicks or shadows, and so there's a stock you had an opportunity to buy, and it's still not too far from there. If it buys, you can buy it again. Stops are hard on these things, guys, because intraday, that overshoot alone, let's try to give it to you in percentage terms, was about 13%. So the key again is small position sizes, where you're not looking to make a 13 or 20% gain on these stocks. Looking for, at least I am, 200 to 2,000% returns, possibly more. So therefore, 13% run below what might be normally my stop might be placed at, you have to allow for that. It's all about the risk to reward. If you can't tolerate a drawdown of 30-40%, if you're shooting for 200-300%, then you're trading the wrong vehicle. You're going to get stopped out with this type of volatility. So keep your position size small enough where a 30 or 40% stop loss, it's all relative again to your profit target, is not going to hurt you from a dollar perspective, as far as buy points, if that level does go, these two green lines, I think that's pretty solid support there. You can see the reactions there, reaction there. So this is around 90 cents to a dollar or so. THCBF is a relatively new. Look how that's thinly traded, but in volume, like everything else, a lot of volume started to come into there. So this one has a key support level here around 0.5490. So you can buy it down to that level with a stop somewhat below. Maybe use a closing basis below, or 5-10% below that level. Again, it's a low price stock. And I might be able to draw a downtrend line here. I don't have many reactions yet, but this could be forming a descending triangle pattern. So maybe a pop above that downtrend line. If not, the next thing you look for bullish price action is a breakout above the previous reaction high. So there's a reaction high there. Ignore that long candlestick wick. I would look at these reactions here, and that's about the 107, call it 108 level. So those would be your buy points. You can buy on breaks of resistance or buy on pullbacks to support with stops not below. That one should hold that level. Maybe once a run, they might want to run the stops for a couple days. Remember, these low price stocks, it's a lot easier for the market makers or anybody, referring to an institution, with enough money can move the market, can run stops. If they want to own this stock, they'll pull it down, they'll short it, do what they need to do to get it down here, run your stops, turn around and buy it at that lower price. Close out their short position for a gain, and then ramp this thing higher. So again, you're playing. I mean, that's stock trading, guys. It's a treacherous market out there, but you just have to think like the pros and incorporate that into your trading plan and see if you're comfortable with allowing, a little bit of a drawdown below there. But you can't, you don't want to let it go to zero unless you put in enough money in that stock that you're fine. But I don't like this one if it goes below that level. I'll just say it now. I would bail on that one because there's not really any support below there. AMMJ, did I cover that one? Yes, I sure did. CANN, I covered. CCAN, CCAN, Canadian Cannabis. One thing I didn't draw on this chart. This video is getting long. I'm probably going to wrap it up right here, and then I'll do part 2 later. I'll probably put everybody to sleep on this. But there are so many, and unfortunately, there's not a widely held. I'm sure there will be soon. There's probably, I think one already rolled out, an ETF I'm referring to. But I can tell you that if an ETF's rolled out, it is a safer way to play the sector. But the charts on all these are different. This one looks pretty good here. It's setting up in this bullish falling, not a bullish falling wedge. I shouldn't have said that. But there is bullish divergence in place, positive divergence. And it's also back testing this downtrend line. So this one looks like a buy. I mean, ideally the other day, and it got down here at about 0.5, half a cent, 0.50. That was a good buy around there, 0.51, 0.52. But it's still not very far above that level. But here's the thing, guys. There's no momentum. Any momentum in the sector right now overall is to the downside. So I'm not in a rush to scale into these. Be very selective. Keep things small. I would rather miss out on the first 20% plus move and start seeing the sector moving up on volume, a lot of these stocks bouncing off support, and be pretty confident that the current downtrend, again, overall, I'm speaking in general, there are some stocks still in an uptrend, that current downtrend is over and that the next leg up has begun. So there's no rush right now on these, but I just wanted to share the charts, go over the charts because I've covered them so much in the past. I already talked on Cara, CNBX. Look at that divergent high, very clear divergence. Look at the peaks. Look at the separation on the PPO, and looks like a possible buying climax. You see the huge volume surge, just like you had back here too, buying climax, sell off. So this one, my best guess is there's more downside to come. And that would look something like this. Obviously, that uptrend line is support. So if we got down to there, you could certainly go long there. And it might bounce off that level. If not, I can tell you there's some resistance comes in around, support comes in around the $1 level or so. And beyond that, let's clear this out. Yeah, I would say that would be my line in the sand right there. That number's at 25 cents or so. That stock has no business going below 25 cents. And I know it's a pretty big drop from where we are, but it's still from where the stock has come from, 2 cents a share. Remember, log scaling, guys. That from 2 cents to 25, that was over 1,000% return. So if it happens to break down below this wedge, comes all the way back down there, that's about a 91% drop. That's why you don't want to ride that out. But if it gets there, you can certainly go long. Again, I don't expect it to go that low, but that would be my line in the sand. It has no business going back down below that level. I'm going to wrap this up here. This video, there's too many individual stocks, but in part two, I'll cover the names that I didn't get to yet. And I spent probably the first 8 or 10 minutes of this video talking about the history of the sector, my thoughts on the sector, trading tips, using the small position sizes, shotgun approach, spread your money around, strategically scale in, scale out, that kind of stuff. So next time I'll just wrap up on the charts of the remaining, I'm just glancing, maybe a dozen or so. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.